Digital lenders have up to 6 months to get new licenses from the Central Bank of Kenya before they are permitted to operate in Kenya in accordance with the new legislation. As the news tightens on previously unregulated digital lenders, CBK Governor, that is Patrick Njoroge, indicated that new regulations under a new law are anticipated, which are to be gazetted this month. Last December, President Uhuru Kenyatta signed a legislation allowing the central bank to oversee digital lenders, giving the bank the authority to punish lenders that breach customer privacy. Regulations regulating digital credit providers will be gazetted later this month, and according to Njoroge, that will pave the way for CBK to license and oversee DCPs. Now, by September 22, all previously unregulated DCPs will be obliged to apply to CBK for a license or discontinue operations. The Digital Credit Providers Regulations of 2021 gives the CBK the authority to cancel the licenses of companies that use name and shame techniques to collect money by sending information about loan defaulters to other parties. Today, we will be focusing on Kenya as its government takes on digital lenders. This is Business Edge. I am Lekan Onabanjo, standing in for Tolulokpe Adelere Balogun. And joining me on the program from Nairobi, Kenya, is Dr. N Iraki, Faculty of Business and Management Sciences, University of Nairobi. Doctor, you're welcome. Thank you for coming on board Business Edge.
Thank you. Good morning.
All right, so Kenya recently gave online lending platforms about 6 months, that's ultimatum of 6 months to acquire operating licenses. Now tell us, what is actually the scope of that license, and why do you think the country feels it necessary to come out with this move?
For a long time, Kenya has been called the Silicon Savannah, and we have been very good in coming up with new innovations, particularly on fintech. The most famous one has been Safaricom, which has been there for about 10 years, where you can send money, and more recently, you can borrow money. And you can also use the same app to pay for goods and services. So that attracted a lot of other investors from Silicon Valley and elsewhere, who have found that it is very easy to come up with an app and make money in Kenya. And the most recent apps have been about borrowing money, but they're not regulated by the central bank. So they have been getting very good interest rates from their customers, but more importantly, and what has brought in the central bank, is the method they use to make sure that you pay. The name and shame. So if you don't pay, they go to your phone book, I don't know how they get it, and they call your friends, they call your parents, they call your spouse, and tell you to pay. So they are trying to name and shame to make sure that people pay for their loans. And that has annoyed a lot of people, and they have called for the central bank to regulate them, that they can be like other lenders, probably like banks.
Well, no doubt the name and shame technique is actually annoying and demeaning in personality, if we could put it that way. But then analyzing these new regulations, do you think it is fair, or it's been fair on both sides when you look at the lenders and the borrowers? And do you also think that these new regulations actually capture all the intricacies concerning the controversy?
You have to remember that one of the reasons why these digital lenders have done so well in Kenya is because that particular space is unregulated. Anytime a certain business is not regulated, it grows very fast because it can be innovative. They can try new things. So by coming up with new regulations, we fear that the growth in this sector is going to slow down. So it is fair to the customers because their privacy will be protected, but it might not be fair to the lenders because they might not get all the returns they wanted. Remember, they have not been doing anything illegal. They have been taking advantage of the market that is growing, that is doing very well. During the COVID-19, a lot of people did not have jobs or lost their businesses, and they wanted money for daily bread, money to pay for medical services, and other very essential services. And what was a better alternative than borrowing money from these digital lenders? So the environment was suitable for their growth, and I fear that with all these regulations, they may not grow, they may not do as good as expected, despite protecting the lenders' integrity and private information. Remember, it's a question of supply and demand.
Well, Kenya has about roughly 100 lending maps. Now, why do you think is the factor responsible for the proliferation of these platforms?
I think I see probably three reasons why they have done very well. One of them is that Kenya has been very innovative when it comes to fintech. Remember, we pioneered M-Pesa, paying for goods and services and sending money through M-Pesa. And other people came and realized they can also make money there. So they followed that. And number two is that that space has not been regulated. And as I said earlier, any business arena that is not regulated leads to growth. And number three, Kenyans have always been very entrepreneurial when it comes to making money, not just in digital space, but in other spaces. So when this opportunity presented itself, people came up in large numbers and they have made money. In fact, when I was checking one of the digital apps this morning, I actually realized it's not even registered in Kenya. It's somewhere from Silicon Valley. So that freedom is what has made this sector grow very fast. And of course, not enough regulation.
All right, now, do you see these new regulations actually discouraging these platforms? And do you also think it will discourage their growth and customer refocus, and most especially the DCPs now and the kind of customers they choose to engage with?
I can assure you that Kenyans are very innovative. They'll probably come with new ways of going along the new regulations and coming up with probably other apps or other means of shaming those who do not pay their own on time. That space has no shortage of innovation. So I'm not worried about so much about regulation because people will become more innovative and go around it. But we hope that through this regulation, the sector can grow, the sector can prosper because the ordinary Kenyans, ordinary people on the streets need it. And they are doing what the government, what the banks cannot do. So why can't we benefit from this innovation? We should.
You talked about the fact that Kenyans are entrepreneurial, but then you would agree with me that these loans and these benefits that they get to fund their businesses would actually help them grow more of their business sides and shades. But then, now that we're having this issue, what do you think is the pulse of the Kenyans? Do you think they're supportive of this new legislation, or do you think some of them are a bit skeptical about it?
I think Kenya are probably divided because there are some people who have really benefited from getting these loans. They are getting loans they would never have got from an ordinary bank. Remember, one of the biggest advantages of these apps is that you get the loan very fast. Sometimes even before you finish the transaction, you find the money on your M-Pesa, on your digital wallet. So Kenyans are happy because they can easily get the money, but they are also unhappy because the charges are very high. The shaming is very high. So they are probably ambivalent. They are not sure whether they should say yes or they should say no. But I think with the time, we can see how regulation takes place, how regulation works, and we see where to go from there.
All right, before we go on a break, let me quickly engage you on this. Now, one of the biggest issues with online lending platforms is the issue of breach of privacy. Now, if you would advise them, are there other ways or other means of recovering these delinquent loans without having to breach the customer's privacy?
I think they can learn from merry-go-rounds because a lot of small-scale groups lend money to each other. I know women are very good in such. And they don't shame each other. They use trust so that if you are given a loan, you are going to pay it back because you don't want to shame your colleagues. So what they probably can do is to use the same approach so that before you borrow money, you get some guarantors. You get some people who can stand in for you so that you don't keep on calling everybody if a customer defaults. You call a small circle of people who guaranteed you that loan. That is one way. And number two, they can ask for a collateral. Maybe you can give an asset so that if you're not able to pay that particular loan, they take asset. But the shaming and naming is not the best approach.
You talked about taking assets. I just needed to chip this in. You talked about collaterals as assets, but don't you think that will be defeating the actual purpose of the coming on board of these platforms? Because one of the reasons why most of these Kenyan citizens go to them is because it gives them the opportunity to get these loans easily, speedily. Now, without having to, make do with collaterals. But then, don't you think that would defeat the purpose if the platforms would have to start asking for collaterals?
That's what I'm saying. Instead of getting a collateral from an individual person, you can have it distributed among the group members. And the other collateral could be your group member's reputation. so that if my reputation is spoiled, my group members' reputation is spoiled. But sometimes, if you look at most of the money we get through this app, it's not a lot of money. It's probably a maximum of 30,000 Kenyan shillings. So some small assets like your phone can probably start in, and you'll be able to pay your phone, your own much faster.
Dr. N Iraki, you just get to stay with us a bit. I'll be back with you in just a few minutes. Well, before now, digital credit lenders only had to register to set up operations in the East African country. But now, the newly approved Digital Credit Providers Regulations 2021 requires that they apply for operational licenses, while CBK has the powers to revoke such for those who tend to send information of loan defaulters to third parties in name and shame tactics meant to recover their money. Well, a break will do here, and when we return, we get to find out how the Kenyan government hopes to address the cash crunch, forcing its citizens to patronize these money lending firms. We'll be back in a bit. Still with me on Business Edge is Dr. N Iraki, Faculty of Business and Managing Sciences, University of Nairobi. And our discussion has been centered around Kenya's taking on against inimical practices by digital lenders. Now, let's come back to you, Dr. XN. Now, the disadvantages of these apps have actually made the government to crack down on them, that is the DCPs, and a new legislation has been formed. But then, what does this say about their rise and these innovative techs that they're trying to bring on board, most especially the role of fintech in the whole of this discussion?
I think we should start by asking a very basic question. Why are Kenyans borrowing money through digital apps? It's because they don't have the money. So one way to address what the digital apps are doing is to improve the economy, make sure that people have jobs, people have a monthly salary or weekly wages. And if people have money from jobs, they don't need to earn that money. So I think we are spending out money focusing on how people borrow money, not why they borrow the money. And I think that should be the basic solution. Let's find out why people are borrowing money. The solution is expand the economy, make it easier to start businesses, make it easier to expand businesses, and people will not need to borrow that money at very exorbitant rates. And of course, end up being named and shamed by the lenders.
Well, you talked about how to borrow money. The emphasis should be more on how, not where. I want to understand that aspect.
You see, at the end of the day, people go to digital lenders for a very simple reason. They are very efficient. They give you money very fast. You can still get the same money from the bank, but it will take a bit longer. You need to have a bank account and so on. But apart from getting that money, we need to go back and ask, must you borrow money? If people have very good jobs, people having very good business that are running, and they are getting some income either daily or monthly, they don't need to borrow. So one way to control these digital lenders is to give them competition. And the competition is having a good job, or make it easy for the banks to lend money to ordinary Kenyans. So we should not just look at the digital lenders, but look at the whole financial sector and the borrowing regime. Remember, even the government itself borrows money, not just individuals. There's a whole sector about how we borrow money and from who we borrow in Kenya.
Well, there's no doubt that Africans need money. I'm sure I need money for business, and I'm sure you also need money for business too. But then the issue has to be around how the Kenyan government is addressing the issue of cash crunch that actually pre-exists within the Kenyan community or business community, as it were, most especially with the use of fintech. How are they addressing it? And how do you think they should address it to ensure that Kenyans who are entrepreneurial, ideally can have more money to do business in order to recoup from these businesses?
I think there's no doubt from the theories of economics and theory of finance that debt is a very important component of any capitalist economy. So people borrow money because some of the people who have ideas don't have money to implement them. So it's always good in a capitalist system to make sure that people easily get credit, people easily get money to invest or to expand their ideas. So what we should be talking about in Kenya is to make it easy for people to borrow money. It doesn't matter whether it is from digital apps, it doesn't matter whether it is from banks, it doesn't matter whether it is from multilateral organizations, it doesn't matter whether it is from your brothers and sisters. One of the things we need to make sure that we have in Kenya is trust, so that when you borrow money, you get it back. When you borrow money from anybody, you pay back, whether it is the government, whether it is individuals, whether it is digital traders. We make sure there is trust. And that is why recently Kenya came up with Credit Reference Bureau, so that we can have your credit history. And that is one substitute we can use instead of naming and shaming people. But before you borrow money from these digital apps, they get your credit history and they know whether you are going to pay or not. And you can get very low rates if you have very good credit history. So there's already precedence on how we can enhance borrowing and make credit an important part of a capitalist system, beyond naming and shaming.
Now, looking at this new legislation that the Kenyan government has put out, do you think that these online lending apps will be able to meet up with the government's regulatory demands? And of course, do you think this will also help them to continue to service their customers and not lose on return on investments?
With this new registration, some of the apps or some of these digital lending platforms are going to shape up. Some will be able to reform and be able to deal with the new regulations. And I can guarantee you some of them are going to cross shop and go. So what I expect to find at the end of the day is probably a few digital lending platforms that are efficient, that take care of the customers, and complement banks and other lending systems. That is what we need at the end of the day, so that our debt market is vibrant, entrepreneurs can easily get money, they put it into investment, the economy expands, and everybody is happy.
All right, so Doctor, finally, we understand that Kenya is a trailblazer when it comes to creating some useful digital financial solutions. Now, what are those things you would advise other African countries to look at Kenya and tap into in terms of these creative solutions that Kenya is bringing on board using technology? You look at the fact of, you look at platforms like M-Pesa, and you also look at other lending platforms. Now, what are those things you think that other African countries can emulate from this so that they can also bring better services when it comes to providing financial solutions using technology?
I see three things that they must do. One of them is they must educate their workforce, so that people are technology savvy. People have computer knowledge, people have internet knowledge, and they know how to use technology. Number two is they must invest in infrastructure. I am always amused when Kenyans talk to me from the US or UK and they tell me that internet in Kenya is faster than in our country, in a developed country. So you need that. And number three, and very important, you need very good regulation. If you have infrastructure, you have well educated people, and regulation is not suitable to do business, you're not going anywhere. So if you combine those three, there's no reason any African country can be like Kenya, can be a pioneer in fintech and in digital revolution as we have done. And finally, why don't they come to Kenya and visit and see what happens here on the ground? I would welcome and host them, even buy them a cup of tea, including yourself.
All right, thank you so much, Dr. N Iraki. Of course, you've talked about trust. You've talked about having a well-structured organization in terms of these operations for these online apps. But then thank you so much for joining us on the program.
Thank you very well. Thank you very much, and have a good afternoon.
And you too. Well, digital firms have in recent years flooded the local market, attracted by demand for quick credit that does not require collateral. Borrowers get loans within minutes via their mobile phones, making digital loans a quick fix for daily bills. But with this new legislation, can we safely say that the digital money lending space is becoming more structured and regulated? Well, maybe Kenyan citizens would agree more with this stance. Anyways, we get to run off on a break. When we return, we get to bring you some top business stories that are trailing, of course, within the business scene on NC4 to watch. Do stay with us. And on NC4 to watch, let's tell you that South Africa's Civil Aviation Authority announced the lifting of its suspension of Commer's operations late on Wednesday night, opening the way for the Kulula.com and British Airways Comair operator to take to the skies again. The reinstatement of Comair's air operator certificate comes in the wake of the airline group's fleet being grounded on March 12 following the CAA raising safety concerns after Comer reportedly failed to address all the safety issues raised during an inspection by the regulator. Now, Kenya will import 30% of cooking gas through the National Oil Corporation of Kenya in a move aimed at controlling the price of the commodity that has hit an all-time high. The nation's national oils quota is aimed at forcing cash-hungry private importers to lower the cost of liquefied petroleum gas and ultimately retail prices. This follows a review of regulations that reserve 30% of cooking gas imports to the state corporation and carry out its role of influencing market prices. And away from that, Nigeria's Senate has passed a bill that will amend money laundering regulations, including making it mandatory for lenders to report suspicious transactions. The Money Laundering Prevention and Prohibition Act 2022 requires lenders to report all single transactions worth more than 5 million naira, that is about $12,035, entered into by individuals and those involving corporates worth more than 10 million naira to the Special Control Unit Against Money Laundering. The panel will be established as part of the Economic and Financial Crimes Commission. Jail sentences ranging from 2 years to 5 years will be imposed on individuals who break the new law, while institutions face fines for as much as 50 million naira, and the relevant officials could be prosecuted, the government said in an emailed statement. And finally, Saudi media are set to have their bid for Chelsea Football Club ready by the end of the week. According to reports, the Blues' current owner, Roman Abramovich, revealed at the beginning of the month that he is to sell the club, and despite the sanctions imposed on him by the UK government, a sale is still expected to take place. A deadline of Friday, March 18, has been set by the club for prospective buyers to submit their official bids for the West London side. And that's it on today's edition of Business Edge. Don't forget that you can join the conversation on our social media platforms, that is at News Central TV. You can also download our mobile app on App Store and Play Store, and also visit our website www.newscentral.africa. My name is Lekan Onabanjo. Until next time, you have a pleasant day.